Well, good Monday morning, everybody. I'm Marlon Bowling with you, your tour guide to the ag commodities. Man, it's good to have you with us today as we made it through the weekend. And I hope you got the rain that you were wishing for. Some areas did get some rain. Some areas did not, and that was kind of intriguing the way it looked like about the northern half of the Midwest kind of missed out. They drew a blank over the weekend. And so the market seemed to be supported in last night's trade here on the Globex trade. Now, I want to bring in Brian Hoops. He is with Midwest Market Solutions, and he's in Springfield, Missouri. He joins us right now. All right, Brian, it was pretty quiet over the weekend. Some areas got some really heavy rainfall. In fact, I saw some flood warnings out, even among our staff here. Tim was saying he had a lot of rain, and I had just a little bit at home. So, I mean, it was kind of a hit and miss thing again. It seemed to support the market overnight, but I just now, off of the wire, got this new sheet from USDA. I assume you got it too here, Brian. It was an overnight export sale. Let's take a look at what those numbers are here and include everybody here. Let's all find out together. Soybeans were sold to unknown destinations, so that's a bit mysterious. 296,000 tons. You know, these amounts seem like they're maybe getting a little bit bigger. And then we had 123,000 tons of corn sold to Mexico. And in both cases, it's for the 2023 and 24 marketing year, which we're now in. So that means they'll take it just about as soon as they can get it. Now, that's a little bit different than what we saw last week when some of the sales were deferred by a year or two.
Yeah, good morning, Marlon. Hey, I do want to mention before we talk markets here, I was in Dallas this weekend for the R.J. O'Brien Brokers Conference, and there was so many comments made to me from brokers and people in the industry about how much they love RFD TV, they love your programming and what you're doing for the voice of agriculture. So keep up the good work, I guess.
Well, much appreciated, yeah. And right back at them. You know, we love having everybody tune in because it's kind of a two-way street. Like in your case, where you keep us updated on what's going on from your side. And I just wanted to find out what you're hearing on your sources over the weekend here about how we may open up today.
Yeah, so, you know, you talked about the rain over the weekend. There was some parts of like northern Missouri that received some decent rains and just, you know, really badly needed after this extreme heat that we saw this last week. Now it's going to be cooler this week, but pretty dry once again. And then that 6 to 10 day has more heat and more dryness in the forecast. Now for soybeans, I think it's very detrimental to the soybean yields. It really takes the top end of that yield off. For corn, you know, we can afford to lose another 4 or 5, 6 bushels per acre because there's so much play in that balance sheet from the USDA that even if we do, we don't really change the ending stocks into a bullish pattern. They still, you know, going to be burdensome and cumbersome, even if we take off a couple more bushels of yield. I think that's going to keep this corn market kind of under wraps. So it was good to see a corn export sale this morning. We're not seeing anything, you know, to China. They're the number one importer in the world of corn. And they are, you know, instead of buying Ukrainian corn this year, they're looking at South American corn, where Brazil has that second harvest underway and kind of wrapping up. And they have, you know, one of the largest crops that they've ever had, and really shunning the U.S. at this point in time. The soybean sales likely going to end up being China. They should continue. Now, we have a pretty large gap from last year's pace to this year's pace. We're much slower this year. We need to improve that gap, and these sales that we're seeing in soybeans are helping us kind of chew through that deficit. So these sales are, again, like October through February delivery, when South American production is really unavailable, and our harvest is fresh and can get loaded quickly. So, of course, they can always be canceled if prices move lower, but it's a really good hedge insurance policy for, you know, for China and for some of these other countries in case soybean prices continue to move higher because of the dryness that we're seeing to end the growing season.
Well, let's just keep that between us, okay, about the large corn supply. We just won't tell anybody here.
Right.
All right, I was going to tell you right here in the Mid-South region, man, the corn is maturing really fast. I mean, it's really coming down the home stretch here. Definitely the rain won't have any impact on it anymore. It looks like a lot of it's probably black layer or beyond. I had heard that a lot of corn harvest activity is rapidly moving north in Texas. Are you hearing that?
Yeah, in fact, I've seen some corn harvest in Kansas last weekend. Southeast Kansas, they're doing quite a bit of harvesting already. We drove to Dallas and back, and they're in Oklahoma. A lot of that corn is starting to really turn. There's hardly any green left, and so I think you'll see harvest begin pretty quickly, even in southern Missouri areas. South of Joplin, there's a lot of corn that's really losing its green color quickly. And another week to 2 weeks of this heat, maturity is going to be here, and they'll be combining corn very, very soon.
Well, now there's a headline right there. Okay, thanks for providing that. A quick look at how we finished overnight. We were higher by 4.25 cents on December corn last night, and as we came out of the Globex trade, November soybeans were up 11.75 cents this morning. We'll see how they start out. They were just under 14 bucks. December Chicago wheat was 3 lower at 6.1875, but that was a dime off of its overnight high. That's a bit of a concern. Kansas City December down 7.5 at 7.57, and Minneapolis wheat wrapped up the evening session with December down 1.75 at $8.25. Just cleared the $8 mark. We'll come back and talk livestock with Brian Hoops right after this. We are back talking with Brian Hoops, the president of Midwest Market Solutions. He's in Springfield, Missouri. All right, Brian, I want to talk with you about this cattle market last week. As you talk about the cash cattle trade, it seemed like it just took forever to finally get the live basis sales established out there in the plains. It looks like we finally shook the bushes enough to where we did have some sales late in the week. What would you call it? Steady with what we had the week before? If we look at our livestock summary, it looks like the prices didn't change too much, at least on a live basis.
Yeah, I would call it at best steady, weaker in a lot of areas. Some of the early week cash trade was softer, and but despite that, the futures market rallied. And the positive here for the cattle industry is the Packers increased slaughter last week to a 6-week high. And that is, I think, a direct result of their margins improving. They're now over $70 a head, profitable margins once again, as the boxes have moved higher, so they can afford to pay stronger in the cash markets. I think that's what the futures are trying to look ahead and determine when is that going to happen. Now, this week they're buying for next week's cattle, and that's going to be a holiday short and kill week with Labor Day on Monday. So they may not feel like they have to pay up a lot of money for cash this week. They may try and hold it at steady once again and keep reclaiming some of those margins. But the fact that they did increase the slaughter pace, even though it's not a big number, it's still a 6-week high. I think that's friendly, and that helped to rally the futures market to end the week. And it was a fairly strong technical close to end the week last Friday.
Well, there are the futures. Our quotes are from Bar Chart, and we did finish up with October live cattle 45 cents higher. We were at 181.17. December closed 60 higher Friday at 185.12. And on the feeder cattle side, well, we had the September 45 cents higher. They closed at 251.20. You had October up 72. The concern to me, technically speaking, is most of the strength was on the far out deferred contracts. Bulls don't lead that way. Now looking at the lean hog trade here, it was just kind of quietly higher. December was up 12 and February closed 42 higher at 76.37. So we'll see what they want to do in just a few minutes. We'll open things up in about 6 minutes from right now. Brian, great to talk with you again. Thank you, sir, for helping us kick off the week, and thanks for the kind comments too. Appreciate that a lot. Brian Hoops, president of Midwest Market Solutions, with us from Springfield, Missouri.